Hey guys, welcome back to this edition of this video. This is Good Digits Forex Academy, and in this video we're talking about liquidity concepts, also mixing it up with top-down analysis. Yeah, using top-down analysis. Now, without so much talks, in this video you'll be learning how big players steps into the market, how they take liquidity, and we understand from the basic 101 that price moves from one liquidity area to another liquidity area, right? So what moves this market is liquidity. Liquidity simply also means where volume or orders are resting, right? These are areas where big players are interested in entering their trades and getting out of their trade. So this is the exact process I do every single morning, every single day that I want to send signal out, I want to take my own personal trades. This is the same concept I use using top-down analysis, using liquidity concept. Now, you want to just analyze current price action. So because we are on a 1 hour time frame, I prefer starting from the 1 hour time frame, then scaling down to 5 minute time frame for my entry. So you can use any top-down analysis time frame that suits your personality or your goal, right? So we want to look at the current price action. You can see here price has been bullish, right? Giving us bullish momentum, and we notice that price has turned bearish. Now, let's say immediately we got a change of market character around here. We could see there was rejection here. Let's mark this down. First thing first, whenever you want to trade this, you want to mark out your key level areas. That is the first thing you want to do. You want to mark out your key level areas. It's not something you just guess, right? We are not guessing here. We are actually analyzing price action, right? So this is our support area. You can see price found support in this zone. So now we have accurately marked our support and resistance area, right? This has been done for us now. Let's assume all of this has not played out. This is where we are. I just want to believe that we can see the current price action like this. So we are not going to use the replay mode. I just want to see how we analyze this chart every single morning in my community. So let's go straight into the concept. Now we see price has been giving us a bullish momentum, right? You can use your trend line. Let me use this opportunity to explain something. You use your ray line, right, to mark out your trend line, right? So this is what you do. You always start from your source point, always start from its resistance or support area. Simple as that. Your resistance or support area, which is this. You don't need to overcomplicate it. It has to start from the support and resistance area. That is why I said you you have to start with your key level areas, your resistance and your support area. So if you want to take it from your resistance area, you would have done the same thing from here. So we could see price reacting that way, right? You see this touch, close this touch, right? So but we don't need that for now. Now this trend has just helped us to see the price has been bullish, right? And price is about to reverse. Now as you can see right here, right at the top here, we have a strip of liquidity, right? If we zoom out carefully, let's kind of zoom out. So we're going to use this E4 line. You can see price rejected from this resistance area and pulled into here. Can you see? Price takes out liquidity at that zone, right? Can you see? Price whipped out liquidity here and pushed price forward. Can you see when price got into this resistance zone, price got rejected as well. So what we're gonna do, we are looking for whenever price takes out liquidity, right? We want to look out for a fair value gap that will give us an entry confirmation. We don't want to take entries like the blind people, right? We want to take entries alongside with the market makers. Like I always tell my people in the community, you can decide to place your limit order for a better sniper entry, or you wait for a fair value gap, then you join the trade, right? So we can see right here, playing price forward, price swept out liquidity one more time. The same low that was here, you can see all of this. Well, price has been respecting the lows, right? So let's do this. Price has been respecting each lows right here. Price respected this low right here. This is a low. This is another low. right here. So you can see price has been forming higher lows, right? Forming higher lows all the way here. Remember, this is the 1 hour time frame. This is very important to understand that. So we have a low here, and we have another low right here, right? We have another low right here. So all of this low, price respected them without sweeping them out. Now, when price got to this point, creating another low here, this low respected this low, right? This low respected this low. Now you see right here, when price formed another low, it swept this particular low. So here you could expect price to reject of that liquidity line, or you wait for your fair value gap for you to take your entry. So let's say you want to take your entry right here. After price sweeps out liquidity, you are looking for a fair value gap. Now, if you don't know how to spot fair value gaps, you can actually use indicators, but simple 101. Here is a fair value gap, right? Let me zone it out. Here is a good fair value gap area, as you can see right here. Now you want to enter in this fair value gap zone. You can see price pulled up and pulled to the upside. This is the 1 hour time frame, don't forget. So you had 1, 2, 3, 4, 5, 6, 7, about 7 hours, right, in full profit, following this same simple um, practice, right? So price took out liquidity here, price took out liquidity, these two liquidity right here took out the lows. But why are we not entering? Because price did not give us a fair value gap, a bullish fair value gap, right? Now I mentioned something that whenever you have a breakout of a resistance or support line, always look at the breakout carefully. Look at the candle that broke out. Is it a fair value gap candle or not? Now, if we have a breakout as well in liquidity concept, right? We have it has to break out with a fair value gap. That is the law. It has to break out with a fair value gap. Now, if price sweeps a an established liquidity area, which is the lows, right? We want price to sweep with um, a fair value gap, right? Now, price swept with a fair value gap right here. Let's zone that out. And remember, we don't just jump on the trade immediately. We have a fair value gap. What we want to do is we want price to return into that fair value gap right here. And I tell my students, you can either choose um, any of your entries. You can decide to enter at the tip of that fair value gap or 50% of the fair value gap, which is this. And your stop loss will be just a little bit above that zone and target the next liquidity area, which is this. You can target this or you can go all the way down. It depends on your choice. So this is a very good entry. We got a fair value gap that broke out this low, and look at how price played out. Now, moving price forward, you will see another opportunity right here. Price broke out this liquidity, right? This particular liquidity area. You can see price broke out this liquidity area. Let me bolden it so you could see the specific liquidity area I'm talking about. Right, this tick one. Probably I should just change the color to red. So this is the liquidity area right here. And you can see price broke through it again with a fair value gap. What are we going to do? We want to take our entry when price retrace into that gap. It is as simple as this, right? We want to take our entry right after price returns into the fair value gap, right? How do you want to take your entry? At the 50% or the entry zone 50%, right? This is a very good trade. Your stop loss will be just above that fair value gap. Some people prefer the wick, right? The body of the candle that caused the fair value gap, and you target the next liquidity area, right? You want to target the next liquidity area for so you want to target the next uh, liquidity area for your take profit, right? This is exactly how to trade it. But remember, we are not taking our entries on higher time frame. Don't get that wrong, right? We are not taking our entries on higher time frame. Where are we taking our entries? We are entering at either the 15-minute time frame or the 5-minute time frame. Now let's jump. right into the 15-minute time frame and see price for ourselves, right? Let's break it down. Let's start all over from here. You can see how beautiful it is. So now let me quickly mention this real fast. Whenever you're doing your top down analysis, all you need to do is to mark your resistance area and mark your support area. So once that is done, then begin to mark out your liquidity areas. And where are your liquidity areas? Those swing points, right, are your liquidity areas. These are your areas of concentration, right? These are your areas of interest, all of these swing points. So when you've highlighted that, then go down to your smaller time frame. Don't forget your resistance, support, the swing lows or the swing highs, wherever that is convenient for you. But for me, since this is an uptrend, we're looking at the swing lows, right? Mark them out and make sure that you know the trend you are about to take. So you scale down to 15-minute time frame. That is the first thing you do on your 1 hour time frame. So after scaling down to your 15-minute time frame, you're expecting price to what? Take out this liquidity. Can you see? Take out the liquidity here and also give us what? Okay, this was the first sweep. Yeah, this was the first sweep. Look at that. Price swept the liquidity here after respecting all of these lows. Price came back, sweep out the liquidity here, and after getting a sweep of liquidity, you can either take your entry right at the close of that candle, right, or you want to wait for a fair value gap candle for a confirmation entry. Now look at this candle. This is a fair value gap candle. What is this? We got a very fair value gap candle. Now you want to expect price to pull back. You see, this fair value gap acts like a magnet, right? It acts like a magnet for price. So for price to keep on pushing up, since we've taken out liquidity, we will expect a fair value gap. Now after that has been formed, this is how we want to take our entry. We want to go long. We're going long right here. Is that you enter immediately at this level or you want to enter at the 50% of your range, right? So depending on your risk appetite. So you target this next liquidity area. You can see price, there's also liquidity resting here as a resistance, right? This is where you want to target as your take profit, and your stop loss will be just below the fair value gap right here. So if you want to be wrong, you want to be wrong quickly, just like I always tell my student. Now you see, price hit your full TP, right? Price hit your full TP, no doubt, right? So we got this clean trade using the same concept, right? So let's look out for other opportunities. See, price swept this liquidity right here, closed with a bullish candle, but for me there was no. This is the fair value gap right here, but it failed. Price failed to hold right here, right? Normally, we want to also take our entries at this zone. We want to go long. So price pulled into this, into that same fair value gap. We want to target this and our stop loss just below the gap. Normally, this is how we would have taken the trade, but price took us out from this particular trade. But don't worry, we're still going to recover. The recovery setup, you can see price came into this liquidity area right here, but did not give us a valid fair value gap around here. Okay, this was one. This was one of the fair value gap price gave us. You can see price tested it and failed. So there is no valid 100% strategy that works every time. Now we've hit 2SL. Remember, we've made big profit right here, but we hit 2SLs. Now the stop loss cannot be more than 10 pips stop loss. So you see, we've noted that out. Now look at this. Remember, I said whenever price breaks through a fair value gap, a liquidity area, or a support and resistance area, it has to break through with a fair value gap. That is the only condition. It has to break through with a fair value gap, and which is this right here. This fair value gap right here. Can you see? This was the fair value gap that broke the liquidity area, right? This liquidity area that has been established right here. So you see when price wants to break through it, is broke through it with a fair value gap. Now this is valid. Now we don't want to chase that trend, right? We want to wait for price to get back to that zone before we take our entry, right? This is how exactly we want to take our entry, and we want to go short from here, from the 50% zone or the immediate entry zone. So depend on your risk appetite. Now we want to take short. Where will be your next profit area, which is this, the next liquidity area. This simply explains the fact that price moves from one liquidity area to the next liquidity area, right? Price moves from one liquidity area to the next liquidity area. So if we move price this way to this side, play price backward, we could see a liquidity area right here. And this same liquidity area is where price is going to definitely respect in the future. So this is where we take profit right here, and we take our entries right here. So whenever you have this setup, we expect price to break in with a favorable gap. Now moving price forward, we could see price breaking this liquidity area just one more time. Price breaking that liquidity area with a what? With a fair value gap one more time. So let me push this side. This is just a continuous milking opportunity. Keep on milking the market. You see a fair value gap right here, right? So, and this is how you want to take your entries. You want to go short 50% or the exact entry point, your stop loss just a little bit above. It's good, like I said, because this is just 27 pips, right? It could be this, that if you put your stop loss too tight, the price will wake you out. So give enough room for price, because you know this strategy actually works. So give enough room for price to dance in and dance out. You can see this was the fair value gap that broke through the liquidity area, and we're entering our position right here. Where will be your next take profit area? This will be your next TP area. So you see, with this, you've been able to recover those two short losses, right? Those two short losses that you made. Let me bring back those the two. So here you would have wanted to enter at this point, your stop loss below this, right? This is exactly how we would have gotten trapped in the market, right? This is a fake out. Now look at this price fooled us one more time, sweeping out the liquidity at the low, but didn't respect it, right? Look at this, another opportunity, but we got stopped out. Can you see twice? We got stopped out twice. But by the time price played out, give us another opportunity right here. You see how we scaled through and we made full take profits, right? Back to back take profit. Can you see? So now price retest back. Okay, look at this opportunity right here, right? Pay attention, guys. Look at this opportunity. Price broke through this liquidity area right here. So we want to mark with a fair value gap, right? So we want to mark that zone out, and your entries will be right here. So we are looking for short opportunities. So your stop loss just a little bit above that zone, giving price enough room to breathe. So our entry, where will be our take profit? The next liquidity area. So this is how we keep making money, right? This is how we keep making money back to back. You see how we are going to enjoy this trend on to the last zone. So this is top-down analysis using fair value gap. Using liquidity concept. I'm sorry, using liquidity concept. You could see on the 5 minute time frame. Look at how those sniper entry played out. Right. Look at price broke out with from that liquidity area. Price broke out the fair value gap. You could see we marked that zone as our entry, and see price came back to that zone and gave us a good take profit. Can you see price broke through with this fair value gap as well? So in this 5 minute time frame, you can see if we want to fine tune our favorite gap, we could have fine-tuned it better and gotten a better entry position, which is this. Guys, can you guys see this? See, Our stop loss still untouched at the right zone. You could see we made would have bagged more profits. Can you see right here? Full take profit using the same strategy. You could see price broke out the fair value gap right here. So if you want to fine tune that particular fair value gap, we have something like this. Can you see? We had something like this, and our entry will be right here. Can you see? No drawdown, very little drawdown. See, so this we're expecting price to what continue dipping below the trend, like keep on dipping and take this next target. So to wrap everything up on your 1 minute time frame, sorry, on your 1 hour time frame, you just want to look out for your trend, mark out your resistance and support area, mark out your lows, right? Mark out your lows of the area. This particular price action that we just analyzed has already played out. Now let's reanalyze it for future opportunities. So I'm going to clear all of this out. This is not a signal, but just for you guys to learn. Now, what do we want to do? We want to mark our resistance area, which is this zone right here, and our support area, which price has been respecting, which is this right here. Now, because we don't want to keep on winding and dining at okay, let's just keep it simple. Let's keep it simple. I don't want to overcomplicate it. But let's say this is a breakout area, which is this zone right here. Right, look at this zone right here. Yeah, so when we've marked out our key level areas on the 1 hour time frame, what do you want to do next? You've marked your key areas, your support, your resistance. This is your flip zone, right? So you want to use your trend line. Pay attention, guys. Use your trend line. You can see starting from the peak right here, just having 1 or 2 touches is okay. We don't need to force everything out to be in alignment with what we're drawing. If you want to fine tune it, you can fine tune it right here. Now we see we got multiple touches right on the trend line. So you could see if we fine tune it better, you could see that this was just a liquidity sweep of the trend line area. So this trend line, for me, it is valid, right? It is valid. You don't need to overcomplicate it. You don't need to make it 100% perfect. Just make sure that it is in alignment. Now, after doing this, what is the next thing? We need to mark out your area of interest. Now, in the previous analysis, we marked out the lows, right? We marked out the lows because it is an uptrend. But because this is a downtrend, I want to mark out the highs, right? The lower highs. This is our major concern, the lower highs. You can use the week. Yeah, some people might ask that where are we going to use to mark out our area of interest? You can use the week, and if you want to use the body, it's all good. Now, this we've done that. I believe this is also a high. This is also a I don't want to consider this as a high, but I'll consider this as a high. So this is what we're gonna do when price continues to play out. We'll start with our 15-minute time frame. Can you see we've marked all of that area out, right? So this is what we're expecting price to play out when it is daybreak, right? When market opens fully. So we expect price to bounce off this area. Can you see? And if we look into this, we could see an opportunity warming up right here. Price tested this flip zone, giving us a fair value gap, showing us that the big players are interested in this market. So we expect price to just dip into this, break through this zone with a fair value gap, breaking it this way. So this is what I'm expecting, a fair value gap breaking it. So I want price to what? Let me use the part two. So I want price to dip right here, move this way, all the way up with the fair value gap right here. I want price to retest into that fair value gap and come all the way here. It's going to give us a reaction definitely on this trend line. One reaction down here and break out and we target all the way here as our take profit, right? As our take profit area. But because this is a 15-minute time frame, you could see we'll have to consider this as a liquidity area. This is our internal liquidity area. So we've marked that out. And where then if we want to take our entries, we want to take our entries this exact way. We want to go long right here after price breaks out this liquidity area. Price has to break this liquidity area right here for a reversal, right? So we want price to retest back into that fair value gap. Let's say 50% of the fair value gap. We're going to target this as our take profit, or we can just choose to go this as our take profit. And your stop loss will just be a little bit below that fair value gap area, and that is just it, right? That is just the basic 101. So wait for price to break out any of these liquidity areas with a fair value gap, tighten your stop loss and target the next fair value gap. So I believe for this you understand the concept of top down analysis. So let's fine tune it. Let's go down to 5 minute time frame. Can you see our trend line all the way from this top, right? All the way here. Price broke on with a liquidity sweep. You can see price retraced a little bit into that zone and pulled back. So it means this our zone is absolutely correct. Now we could get a reaction right here because this is a fair value gap area. We could get just a minor reaction right here. So this, can you see? Perfectly aligned with the trend line, just like I said, perfectly aligned with the trend line. See, price is going to break through this liquidity area, fill up that liquidity area, come all the way here. It's going to reject. Why? Because we have a fair value gap area here, which is going to act like a resistance, right? It's going to act like a resistance. Also, we have a confluence of the trend line, so we have high chances that price is going to reject all the way down here. It might even probably take out some liquidity from this red line, take out liquidity from this red line and fully break price upward. So you can choose this area as the take profit one or this as the take profit two. So this is what we're expecting price to play out tomorrow morning. But if price breaks below this, we still expect price to break below this as well and giving us what a retest of this zone, and we want to wait for a fair value gap around this area and we take a sell continuation. But if price is going to go bullish, this is the exact way we expect price to play out. So all you just need to do is to keep on taking liquidity upon liquidity. If price breaks this liquidity area with a bullish fair value gap, we expect price to return to that fair value gap area and we'll keep targeting all the way till we get to this zone, right? This is our ultimate trade, right? And with this setup alone, you're having 1 to 16 risk to reward ratio. This is massive, guys. This is you just keep on break it even. Let's say you want to put your stop loss. This is one ratio 10 risk to reward ratio. So you keep on breaking even until you get to the top right here. So it is as basic as that. Follow the same law, and this is your checklist, guys. I'm giving you this free checklist. The first thing is come to your 1 hour time frame, mark out your resistance and support area, use your trend line to see the trend direction, then use your horizontal ray to mark out liquidity area. If price is going uptrend, you want to mark the lows of that uptrend. But if it's going bearish, you want to mark the highs of that uptrend. Then when you finish that, go to your smaller time frame and look for entries. What are your entries condition? You want price to break out a liquidity area with a fair value gap, allow price to retest into that zone and take your trade. Basically, basic 101. Your stop loss just 20 pips below your entry position and target the next liquidity area. Make sure that your lines are accurately placed. Do not make any mistakes. Then if prevent your price gets to your resistance area or your support area, you expect price to give us a fair value gap and just following fair value gap concept, right? But if you want to take sniper entries on your support and demand zone, so if you want to take sniper entry, Let me use this for example. If price had a strong bearishness, comes back here, right? I expect price to give me another fair value gap around here, pushing price forward, right? So I want to take my trade right at this point, right? Price will break through this minor fair value gap right here, breaks through it, tap into this, give me a sniper entry, and I'll trade it the opportunity all the way to the top, right? You could see how price has always been reacting whenever it takes out liquidity areas, right? You see how price takes out liquidity areas and push price upward, right? So it is as basic as that, as basic as that. And I believe with this simple explanation, you understand how price actually moves. Now look at this, spot this. If you can train your eyes to see these opportunities sincerely, you'll find it very, very easy to trade. Look at this liquidity resting right here. Look at another liquidity resting right here. So this concept is actually very, very good if you want to like uh, capture reversals, right? Don't just jump on it, capture it with opportunity. Look at this, higher highs, yeah, lower highs, right? All this low. Price took our liquidity right here. You want to target the next liquidity area, which is this for your take profit. So look at this, go long, right? Immediately, or you want to wait for fair value gap. See, this fair value gap is just like your fuel, giving you a true indication that the big players are interested in this trade, right? Look at this fair value gap, beautiful fair value gap. After liquidity has been swept, this is your confirmation. So always train your eyes to spot out these opportunities in the market. Can you see fair value gap right here? And you'd have entered this beautiful, amazing trade. See, let's go long. Look at this, all the way to the top as your take profit area. Your stop loss just below that zone or the next liquidity area, right? Below the liquidity area, just in case if price wants to like strip out this liquidity again before moving up. Can you see? Price hit your full take profit. So just train your eyes. As I was scrolling down, I just spotted the opportunity and voila, that was a good trade. Now, why did I target this as a liquidity area? Look at this. I chose this and not this because this high respected this high. It didn't take out this high, right? If you look at eventually, if I get to see another opportunity like this, you see how if you want to take a sell using this same liquidity concept, right? So let's look out for opportunities like that. This is a high as well. See, price took out this liquidity, giving us a fair value gap afterwards, and we dipped down. We understand that. So that's just the basic 101. So I hope you guys find knowledge in this trading tutorial, and I believe you can make money from this strategy as well. So see you guys in our next video. Make sure you like, you subscribe, share this video to your communities, share this video to your friends. Let them also learn and get understanding. So see you guys in our next video. This is top down analysis using liquidity concepts.